right, welcome to Talkin' Investing. I am Tom, and as always, this is not financial advice. Today, I want to talk about USDC. It is a stable coin. It's the 5th largest cryptocurrency in the cryptocurrency universe. Right now, it is depegged from the dollar, and it has had a considerable crash. I want to talk about why that crash happened, where we go from here, and I also want to talk about why this is an extremely ironic situation. I'll explain more about that in a few minutes. So if you're new to the channel, please remember to subscribe, smash the like button, hit the notification bell. Let's talk about USDC. This is a list of the top cryptocurrencies. So as everybody knows, we've got Bitcoin, Ethereum. Tether is a stable coin. That's the 3rd largest cryptocurrency by market cap. These are listed by market cap. BNB, Binance, and then you have the USDC. That is another stable coin that should be pegged to the dollar. So you're going to see here on Tether's right now 0.2 cents off of the dollar. That's within the normal realm. But particularly Tether and USDC, those are the two monsters in stablecoins. Those two stablecoins are in the top 5 cryptocurrencies. And really, the stablecoins are the basis by which the entire cryptocurrency exchanges survive and provide their services. Why has USDC depegged from the dollar? The principle behind a stablecoin is very simple. So USDC actually has a lot of institutional backing, some very, very big names that we'll talk about later. Their concept is, and they're extremely transparent, they only hold cash and short-term treasury bills. So 20% cash, 80% short-term treasury bills. As a result of this, they do make money because when you hold a stablecoin, you're not getting paid any interest of any kind. But as they hold cash and short-term treasuries, they are getting paid interest. So this is a profitable endeavor for them, and you can see this is still just very near a $40 billion market cap right now. Stablecoins and cryptocurrency exchanges are the number 1 and 2 things that regulators have been really eyeballing and looking to get a grip on. Well, ironically, in this situation, this stablecoin is extremely transparent. They tell you and show you exactly what their money is invested in, and again, it's in cash and short-term U.S. Treasury bills. So that sounds like a foolproof scenario. However, yesterday we had an exceptionally rare thing occur. We had a U.S. bank fail. So I'm just going to get sidetracked for a minute because that is core to this entire story. Okay, this is from Investopedia. This was yesterday. Silicon Valley Bank fails. Insured deposits to be protected. You'll see here the FDIC was named as receiver for SVB, which is Silicon Valley Bank, on Friday. Its shares were halted as the price spiraled further downward. The collapse came after customers pulled deposits higher than the $250,000 guarantee by the FDIC. So we think of cash in the bank as completely safe, but when you are a large company like this and you're dealing in large cash volumes, FDIC only insures the first $250,000. So they have $40 billion market cap, 20% of which is in cash. So you can see this is outside of the FDIC's insurance by a mile. So I will be doing a separate video on this, probably a series of videos, because this is an extremely complicated situation, and this really affects every sector of the financial market. It very much affects what the Federal Reserve is doing. It affects interest rate hikes. The failure of this bank and how it is handled in the next very short period of time is going to be absolutely critical to the health of the financial markets. There is a path, in my opinion, where they can mitigate the damage here greatly. However, if left unchecked, this will spread. And this is just one example of how it's already spreading quickly. Okay, this is the Wall Street Journal. Circle's USDC stable breaks peg with $3.3 billion stuck at Silicon Valley Bank. So we just saw Silicon Valley Bank is now been taken over by the FDIC. They're out of business. They had $3.3 billion in this bank. So that is now tied up. There's 2 questions now that are critical. Number 1, how much of this money are they going to get back? $250,000 of it was guaranteed. They're going to get that back immediately. The rest of it, the FDIC is going to have to sort out in receivership and figure out how much people are going to get paid on the dollar. It's possible everybody will get all their money back. However, that money is illiquid for a short period of time as the FDIC tries to sell off these assets and get depositors their money back. USDC fell below 87 cents on Saturday morning. So that is a gigantic departure from its peg to the dollar. Again, remember, usually a tenth of a penny is about as much as the variance is here. This is 13 pennies or 130 times that. The virtual currency known as a stablecoin is designed to trade exactly at $1. It is backed by real US dollars and short-term government debt and sits at the heart of the cryptocurrency trading. So, like I said, these stablecoins are the backbone of crypto exchanges and cryptocurrency trading. Everything goes through these stablecoins. Okay, so the USDC reserves remaining at the Silicon Valley Bank comprise about 8% of the roughly $40 billion in assets backed by the token, and we can see that's already down. There's starting to be a run on USD. Circle has said it maintains around 20% of its holdings in bank deposits and 80% in 3-month government securities. So we talked about that. So in theory, this sounds like a rock-solid, secure plan to make sure that you remain pegged to the dollar. The one thing this does not anticipate is a bank going out of business. So it does look at a preliminary glance that most of the depositors are going to get most of their money back. That is not for sure. So, that's not financial advice. Please, you're going to have to wait and see how this unfolds. But even if they do, in the short term, if they don't have access to that money, the same thing can happen to USDC that happened to SVB. Okay, this article goes on to say, like banks, stablecoins are subject to runs. If holders of the coin believe that there aren't enough dollars in reserve, they may rush to exchange their coins or to sell them to someone else. That selling has driven down the price. If there's enough of the run on the bank and they need to access this money that's tied up in Silvergate right now, then the money isn't there on a short-term basis, even if they do end up getting it all back at a later date. Cryptocurrency investors redeemed more than $2 billion in Circle stablecoin in the past 24 hours. The pace of USD coin redemptions accelerated through Friday, with most of the USDC coins burned in the last 8 hours. So Circle said in a tweet, like other customers and depositors who relied on SVB for banking services, Circle joins calls for the continuity of this important bank in the U.S. economy and will follow guidance provided by the state and federal regulators. Stablecoins such as USD have become integral to cryptocurrency trading. Over the past 2 years, traders prefer to buy and sell coins such as Bitcoin using stablecoins. So for those of you in the cryptocurrency world, you understand how that works and why it works that way, rather than using more volatile digital tokens or waiting days for trades made with government-issued currencies to settle. So in other words, fiat currency takes an awful long time to convert and settle. So most of the cryptocurrency exchanges work with these stable coins. Okay, so I just want to go through this part because this is where it's really a bit ironic what's happening here. Silicon Valley Bank's collapse shows that how a bank run can ripple to unexpected parts of the financial world. Just last month, the lender downplayed its exposure to the once hot but now hobbled digital currency space. So one of the reasons Silicon Valley Bank depositors were nervous was their exposure to cryptocurrency. And it's part of what caused the run on the bank. Ultimately, it's part of what caused the failure of this bank. They said in their annual report published in February, quote, "We currently have minimal exposure to cryptocurrency and digital assets through loans to deposits from and investments in clients engaged in those industries." So there's Silicon Valley Bank trying to distance themselves from the cryptocurrency world in order to provide confidence. But here's what ended up happening. This article goes on to say it was the inverse, the exposure of Circle to Silicon Valley Bank that mattered in this case. Circle has portrayed itself as a sober player in a rough and tumble cryptocurrency world. It has tried to assure users of its safety by openly disclosing the composition of the dollars backing up USDC. Okay, so this part is important, and this is why I believe there's opportunity here. Right now, as I'm making this video, you'll see that USDC has returned to about 94 cents. It was as low as 87 cents within the last 24 hours. So there's already a lot of people, I'm going to call this arbitrage between the price is selling at right now and $1. The likelihood is extremely high that this will repeg with the dollar at some point sooner than later. Again, that is not financial advice. There's an arbitrage opportunity here, but where those exist, there is always risk. So the risk is that this does not return back to its peg and that the situation gets worse. However, again, in my personal opinion, I think it's highly likely this gets back to its peg in a very short period of time. So I do think there's already a lot of people we know for sure that have made a lot of money in this arbitrage since it's gone from 87 cents up to 94 cents. And it stands to go from 94 cents back to $1 potentially in short order if this is handled in the right way. One of the main reasons I have confidence that this is going to get repegged is this next paragraph right here. It also has deep ties to Wall Street. Circle has raised around $850 million from investors, including asset manager BlackRock. So that alone to me is enough to say that there's a lot of money behind this to probably make sure that this succeeds. Remember, there's 3.3 out of their what was $40 billion wrapped up in this situation. We don't know how much money they're going to get back. Likely they're going to get the majority of that back. The question is, in the short term, can they bridge the gap? Now, also remember, this is a company, by having 3-month treasury bonds, they have made a lot of money. So they don't have to make up 100% of that gap. This just becomes a liquidity issue in the short term. So I think if somebody like BlackRock, they mentioned Fidelity Management, Bank of New York Mellon, these are gigantic financial institutions. So I just wanted to go through this and explain, because this is a potential seismic shift here if this were to fail. If USDC were to fail, that would leave really just Tether, and there have been questions surrounding Tether for some time now. So again, regulators are looking to regulate USDC, but in fact what happened here now is USDC is suffering a potential run because their money in the bank was no good. So you can see how the ripple effects can go out throughout the entire financial industry. I will be doing a video on Silicon Valley Bank because there's a lot more to this story. There's a lot more places that this reaches, and there's some short-term action that I think can be taken to mitigate the problems that might come if this is left unchecked. So that's my update on USDC. Again, please be very careful. This is not financial advice. Trade carefully. Thanks so much for watching. If you're new to the channel, please remember to subscribe and smash the like button. You can also hit the join button and get a bunch of extra content. So thanks so much for watching, and we'll see you in the next video.